So you're welcome back, my dear professional students. Now we'll continue from where we stopped in the previous video. And in there we stopped at note 5. So note 5 is saying that a leasehold land and building which is held for 50 years lease, and there is a 40% unexpired life at the end of December 31st, 2014. Okay, so this is a land and building that is acquired under a lease arrangement. Now this question is silent with regards to whether this is a finance lease or an operating lease. And it requires our judgment to determine if this 50 years is substantial or not. But the question is silent. Let's even look at it. That leasehold land and building. Okay, this is it. It has a cost, okay, of 112,500, and it is being amortized. Okay, for it to be amortized, that means it is definitely a finance lease, because if it is an operating lease, he will not even carry it in his books. Since it is carried in the books as an asset, it is definitely a finance lease. But we are not given the obligation under finance lease, so we won't even bother ourselves about that. So what we just need to do here is just to determine the depreciation charge for this current reporting period relating to that leasehold land and building. And as it is right now, they didn't tell us whether it's straight line or the basis with which we should depreciate. So let me go and have my leasehold land and building, amortization of leasehold land and building. Amortization of leasehold land and building. Okay. So the cost of the land was given. I know the accumulated depreciation. All I need now is the charge for the year. Okay. Okay. So the asset has used 10 years. So the total useful life of the assets is 50 years. So let me even do a test. This is the cost, 112,500. Let me go and transfer them. 112,500. 112,500. And the amortization of leasehold was 22,500. 22,500. Okay. The amortization is 22,500. And the cost was 112,500. Okay, this is noted. Now, having determined this, let me do a test. Since it is 50 years, let me do 112,500 divided by 50. It gives me 2,250 multiplied by 10. Multiplied by 10. Okay, 22,500. So that means the process of amortization is on a straight line basis. Okay, and which is 2,250 every year. 2,250 every year, which is 112,000 divided by 50. So that's 2,250. So the carrying amount we're going to have for the leasehold land and building will be 112,500 minus 22,500 minus 2,250. It gives me 87,750. Okay? So let's go back. So the next note, which is note 6, states that depreciation depreciation for the year is to be charged as follows. He said depreciation on plant, which is 8% on costs, it should be charged to production, okay, which will be the cost of sales. So let's go and deal with that. Plant and equipment is 8% on costs. Plant and equipment. Plant and equipment. So, what's the costs? The accumulated depreciation and the charge for the year. So that we'll get the carrying amount. Okay, so let me go to the correction. So I'll have plant and equipment. Okay, here's my plant and equipment. At cost is 225,000. 225,000. And the accumulated depreciation on that plant and equipment was 102,750. 102,750. Okay, let me go back. 102,750. Okay. And the cost was 225,000. And the charge for the year for the plant and equipment, we were told, is 8% on costs charged to production. So 8%, which is 0.08, multiplied by the cost, which is 225,000, gives me 18,000. And this will be charged to the cost of sales. We have to remember that. So 225,000 minus 102,750 minus 18,000 gives me the carrying amount of 104,250. Okay, that's noted. Now, furthermore, we'll go back to the correction. Then, we'll have furniture and fittings, which is 10% on cost. And we're told that it should be charged to administration. So, let's go and get the cost of our furniture and fittings. Where's my furniture and fittings? Okay, this is it. Furniture and fittings, which is 75,000, that's the cost. And the accumulated depreciation is 23,625. 23,625. 23,625. The cost 75,000. Cumulative. 3,625. Then the charge for the year is 10% on costs. That will be 10% multiplied by 75,000. That will give me 7,500. Then the carrying amount Remember that this should be charged to admin. Okay. So we have 75,000 minus 23,625, right? Minus 7,500. That gives me 43,875. Okay, that's the carrying amount. Okay, so let's pick the next item. And that will be motor vehicle. And motor vehicle is charged at 20% on carrying amount, 25% to admin, 75% to selling and distribution. Okay, step by step. So let's do 20% of the carrying amount first. 20%. Okay, so motor vehicle. This is it. The cost was 112,500. And the accumulated depreciation is 37,500. 37,500. So let me go and have it there. That would be note 7. Motor vehicle. The costs is 112,500. Then I have accumulated depreciation, which is 37,500. Then the charge for the year, which is 20% on the carrying amount, and the carrying amount to be 112,500 minus 37,500. That will give me 75,000. Okay? We are pressing your calculator. 112,500 minus 37,500 gives me 75,000. So if you multiply this 75,000 by 20%, it gives me 15,000. So this 15,000 is the charge for the year. Okay? And we were told that 25% to be to administration and 75% should go to selling. Yes. 25 to admin, 75% to selling. So, admin and selling. That's admin and distribution. So admin will take 25% of 15,000. And that's 3,750. That's 3,750. 3,750. Why distribution will take the remaining 75%. And that's 11,250. So the carrying amount would be 112,500 minus 37,500 minus 15,000 gives me 60,000 as the carrying amount. 60,000. Okay. So the next note is note 7, which talks about income tax on the profit for the year that is estimated at 68,900 and is due for payment next year, which is February 28, 2016. That's next year. But the estimate for tax is 68,900. Let's see if they give us any tax in the trial balance. And any tax will be given in the trial balance would represent either an over provision or under provision for tax. Okay, let's see if we have any tax in the trial balance. Hope you are looking. Okay. Why? We don't have any. So let's go and work with this 68,900. And that will be my workings aids. Taxation. So the estimate of tax is 68,900. So with this 68,900, we'll have it as income tax expense. Income tax expense in the statement of profit or loss. Then it will be a current tax liability. A current tax liability that will show as a liability in the statement of financial position. Now, having determined that, the last note was that dividend of 2 naira 25 kobo per ordinary share capital is recommended for payment by directors, and no dividend was paid in the financial year. So we cannot recognize it because this is just a proposed dividend. And perhaps dividend, if it's declared, it has to be declared before it is recognized in the financials, and it will be recognized in the statement of changes in equity, which will have its effect on the retained earnings. So what we have to do in the next video is for us to now prepare and present the statement of profit or loss and other comprehensive income. We will do that in the next video. So thank you very much. See you in the next video.